students, good morning everyone. Now it's time for your accounts class and my today's topic joint stock company issue of debentures. Okay, so first of all, know the difference between the shares and debentures. Shares are the company owned capital. Debentures are the borrowed capital of the company. So the person who holds the ownership of share is called the shareholder, and the person in return receive the dividend. Okay, and the person who holds the ownership of debentures is called as the debenture holder, and in return the person receives from the company interest, fixed interest. Okay, so first of all, have a look on the one situation which is provided to you to know about the debentures. For this, suppose Mr. Mahesh, the owner of the B Limited, wants to raise the capital from the public. Okay, the options available with him are, so three options available: shares, debentures and bank loan. So if the person just selected debentures, okay, it means the person wants to raise the capital with the help of debentures. Now the question here arises: Mr. Mahesh, the owner of the company, does not want to divide its ownership. Okay, for this the best suggestion, only debentures. Debentures are the best option to raise the long-term debt capital. So see the price list of debentures of HDFC Bank, Bank of Baroda, ICICI Bank, Axis Bank, PNB Bank. This one is the certificate of debenture. So my today's learning objectives: meaning of debenture, features of debenture, difference between the shares and debentures, and the types of debentures. For this current updates, the Tata Motors on Wednesday issued the non-convertible debentures. So NCD, what it means the debentures in future which by the company not converted into shares. Okay, worth rupees 1000 crore for a 3 years tenure at a coupon rate of 8.8% per annum. So here the interest 8.8% fixed provided to the debenture holder. The debentures were listed on the BSE and the National Stock Exchange of the Tata Motors. Reliance Industries Limited to hit the NCD non-convertible debentures market with rupees 10,000 crore issue on April 16. So first of all, see the key terms. Number one, debentures. John Limited issued 10% debentures of rupees 100 each on 1st April 2019. So here first of all the lot of 10,000. Okay. 10% debentures means the fixed interest rate 10% on the debentures, and the face value of the debenture rupees 100 each, and issued on 1st April 2015, redeemable on 31st March 2021. So here redeemable means buyback by the company. The date for buyback on 31st March 2021. It is a written acknowledgement of the debt by the company issued under its common seals. One common seal is provided on the certificate, and signatures of the authorized person also available. It contains the terms for the payment of the principal debt on a specified date. Okay, like here 31st March specified date provided. Interest on debentures. So, on 1st April 2016, Sunstar Limited issued 10,000 12% debenture of rupees 100 each, redeemable as on 31st March 2020. So, how to find out the interest? Okay, for this the lot of 10,000 multiply the face value 100 with the 10 lakh amount, principal amount. Just multiply with the rate. multiply 12 divided by 100. So here the interest amount is 1,20,000, which is provided by the company to the debenture holder. Interest on debenture is a revenue expenditure and a charge against the profit of the company. So from the profits, the interest is provided to the debenture holder. Debenture trust deed. So what is trust deed? Debenture trust deed is the document created by the company whereby the trustees are appointed to protect the interest of the debenture holder. So to protect the interest, the company are appointed the trustees for they are offered for the public subscription. So see the specimen of debentures and trust deed. Collateral securities like house, any type of equity, car, investment is provided, okay, for debentures against the debenture as a mortgage. These include the checking accounts, saving accounts, mortgages, okay, debit cards, credit cards, and the personal loans. He may use his car or the title of the piece of the property as a collateral. If he fails to repay the loan, the collateral may be seized by the bank. So here, seized by the bank and property, any car sold legally of that person to pay the debts. Next, introduction, meaning of debentures. When Reliance Company requires a big amount, it is difficult to borrow this amount from one lender. Okay, so for this, company decided to issue debentures, ask the public to invest in the company. The entire amount required is split up into the units of identical small units. These units are generally of rupees 100, 500, 1000 each. Each unit is called the debenture, just like the shares, only the difference of ownership. Reliance Industry, each non-convertible debenture has a face value of rupees 10 lakh each. So here Reliance Company debenture face value 10 lakh and lot of 3,000 crore. It simply means that the 30,000 units of debentures available issued by the company. So here 3,000 crore divided by 10 lakh. Debenture is a written document issued by the Reliance Company acknowledging a debt and usually secured by a charge on assets of the company if the company failed to pay the amount, principal amount along with the interest. Okay, so in this, if this secured, the company provide after the sale of the any asset. Debenture is used to issue loans by the government and the companies. The loan is issued at a fixed interest depending upon the reputation of the company. So interest is provided just on the basis of the reputation of the company. When company needs to borrow some money to expand themselves, they take the help of the debentures. This one is the certificate of debentures. The face value of the debenture is printed on each debenture certificate. In the absence of information, it is always assumed to be 100. If no value is provided, then 100 is assumed as the face value of the debenture. Now, features of debentures. Number one feature here is debenture holders are the creditors of the company carrying a fixed rate of interest. So here the debenture holders considered as the creditors. Debenture is redeemed after a fixed period of time. Redeems means buyback by the company after fixed time period. Debentures may be either secured or unsecured. See, like Reliance Jio Info Company said it is planned to raise 3,000 crore by issuing secured, redeemable, non-convertible debentures on a private placement basis. So the point here is, what do you mean by the secured debentures? Normally, debentures are issued by mortgage or a charge on the company's asset like building, computer equipment, computer software, construction in progress, furniture and fixtures, intangible assets, land. However, the debentures may be issued without any charge on the assets of the company. Such debentures are called naked debentures or unsecured debentures. Okay, if secured one, then it is some asset provided as a mortgage. Fifth, debenture holder do not enjoy any voting right. So here debenture holder not having any voting right, whereas the equity shareholder having voting right. Sixth point is interest payable on the debenture is charged against the profit and hence it is a tax deductible expenditure. So charge against the after the deduction from the profits, then tax charge on the income of the company. Seventh point, interest on debenture is payable even if there is a loss. Okay, if loss also, then company still provide the interest to the debenture holder. Definition of debentures. According to the section 2, subsection 30 of the Companies Act 2013, debenture includes debenture stock, bonds and any other security of the company, whether constituting a charge on the assets of the company or not. So what is the difference between the shares and debentures? Number one, what it means? Shares are the company owned capital, whereas the debentures are the borrowed capital. Okay, the number one difference, holder. The person who holds the shares considered as the shareholder, and whereas the person who holds the debenture considered as the debenture holder status. In case of shares, the owners, and in case of debenture, the debenture holder creditors. Mode or return. Shareholders are given dividends. In case of debenture, only interest provided. Payment of return. Dividends can be paid to the shareholder out of the profits earned by the company, whereas interest can be paid to the debenture holder regardless of if the company has earned profits or not. It is compulsory for the company to pay the interest to the debenture holder. Voting rights. Shareholder possesses the voting rights, whereas the debenture holder do not possess any right for voting. Conversion. Shares cannot be converted into debentures, whereas debenture can easily be converted into shares. Trust deed. Trust deed is not carried out in case of share, and whereas in the case of debenture circulated to the public, a trust deed has to be carried out to protect the interest of the debenture holders. Now, types of debentures: security point of view, redemption point of view, registration point of view, and convertibility point of view. So, under security point of view, secured one and unsecured, and redemption point of view, redeemable and irredeemable, and registration point of view, registered and bearer, and the convertible means which can be easily converted into shares, and second one which cannot be converted into shares. So types of debenture on the basis of security. Secured debentures. These debentures are secured by charge on the assets of the company. Any asset, any fixed asset, any car, land, etc. Okay. The security may be on all asset which is known as a floating charge. A regular mortgage deed is entered into between the company and the debenture holder. Only the secured debentures are issued in India. So in India, only secured one issued. Simple or naked debentures. So here no any charge on asset, considered as the naked debentures. Such debentures are not issued in India. The next category, on the basis of convertibility, fully convertible means you can convert it in future into shares very easily. Means full lot of 5,000 and 5,000 converted into equity shares. On the date of maturity, no cash payment is made to the debenture holder. Their claim is converted either into shares or into some other form of security. Next, partly convertible means half converted, like your lot of 20,000, only 10,000 converted into shares and rest still debentures. Next, non-convertible debentures, which totally not converted into the future in the form of shares. This is very commonly issued type of debentures by the company. The company keeps the entire money for the full term till maturity on the basis of redemption. Redemption basis means buyback in future. Redeemable debentures, irredeemable. Redeemable, such debentures are redeemed, repaid after a fixed term. The debenture holder get back their money after the term period is over. Okay, the company provides the money and buy back the own shares. The companies generally issue these type of debentures. Next category under redemption, irredeemable debentures. These debentures are not paid back during the lifetime of the company. These are repaid only on the liquidation of the company. At the end, wind up of the company, then only the principal amount provided to the debenture holders. These debentures are also called the perpetual debentures. These debentures are not allowed to issue in India. In India, not available. On the basis of priority, first debenture means first of all provide the principal amount to these type of debenture holders. These debentures are to be paid before other debentures are paid. These are preferred at the time of payment. Secured or second or third debenture. So means after the first debenture, when payment provided to this class. These debenture will be paid after the first debentures have been paid. These are second or third in priority of payments. Now on the basis of record, like register one and the bearer. Register means whose name, address, everything is registered under the company. Okay, the interest and the principal amount is payable on to the person whose name appear in this register. Bearer means these debentures are transferable by marriage delivery. No any name, address registered under the company of the debenture holder. The company does not keep any record of the holders. In India, the company generally issue the registered redeemable debentures. Which type of debentures? Registered means the name, address, everything registered of the debenture holder under the company, and redeemable, which can be buyback by the company after some time period. These debentures are all secured. These may be convertible into shares or non-convertible as the case may be. In case of good companies, fully convertible debentures are issued. Now it's time for your homework questions. What are debentures? Difference between a share and a debenture with example. What are calls in arrears and calls in advance? Give two uses of this security premium reserve. What is a joint stock company? List the name of the companies in India. What are the essential characteristics of a company? These all are your homework questions. Along with this, also watch the YouTube videos of this topic for more better understanding. Okay. Thank you so much, students.